Hey everyone, Michael Bodner here with Tune In Tesla, Episode 1 on Tesla Tunity. Alright, before we get into this evening's show, I would like to start out by offering a sincere debt of gratitude to Trevor Page from the Model 3 Owners Club, and of course as well Eric Camacho and Ian Pavelko. To the three of you, I thank you for my time on the Model 3 Owners podcast, and Trevor especially, everything that I've learned from you. I've mentioned it before in the kind of the early stages of starting my channel, but your willingness to share, and whether it be knowledge about how to start a channel, what software to use, how to try to grow your channel and be successful with it. You never had to do that, and you never thought twice about doing it. So I just wanted to say a big thank you for that. I would have never started my own news segment on a weekly basis without your blessing, and all three of you gave it and even offered your support and asked for people to follow me on Twitter. So I am so thankful to all three of you. I can't wait to join you again as a guest host, and I especially can't wait till we're all together live in February for a live Model 3 Owners Club podcast. But again, just thank you from the bottom of my heart, and I hope you all enjoy my weekly Wednesday show called Tune In Tesla. And we'll go ahead and get started now. On tonight's episode, I'd like to focus on Tesla's third quarter financial results. All right, well, let's go ahead and jump right in. So let's start with some numbers. I don't want to get them wrong here, so let me check. Give you the exact numbers. Tesla reported a GAAP net income of $312 million. It's important to note that Wall Street actually expected Tesla to lose money, a small loss, and they posted a much larger profit than expected. So great news to start. Free cash flow, $881 million. Cash and cash equivalents, $3 billion, and that's up $731 million from the previous quarter. Model 3 gross margin actually topped 20%. Certainly from the breakdown videos that we've seen, we've expected a higher percentage, but on past calls, Tesla actually reported lower projections leading into this quarter. So this is really great news. Higher than expected margins on Model 3 so far in the third quarter. And last but not least, probably the best bit of news that we saw in the package, an expectation that this is going to continue. This isn't a one-quarter burst. They expect to be profitable from Q4 throughout. The only exception is when Elon made mention that there might be periods of time where there are certain paybacks, and he did mention Q1 2019 as one such time period. But other than that, the future looks very bright for Tesla as we move forward. All right, so starting with the opening remarks from Elon, he mentioned 84,000 deliveries in Q3. And to put that into perspective, that is more deliveries of cars than Tesla had worldwide in 2016, the entire year. Elon also stated that the Model 3 is the best-selling car in the US by revenue and fifth by volume, which is pretty impressive given the average selling price of the vehicle. Tesla also had the best quarter ever for their solar products, which is quite impressive, given all the attention and focus on Model 3 and the production ramp. Elon also, he even choked up when he mentioned this one, but he said, what other company out there has customers who are so loyal and care so much that they would put the energy and effort into helping with deliveries, as we saw at the end of quarter 3. So really just a remarkable job by everyone out there, all of the Tesla customers who love the company so much that you really just want to see it succeed. Great job, everyone. Additional highlights for quarter 3 saw the beginning of the rollout for the version 9 software, which is great, tremendous improvements in the neural net, and a lot of great things that we're going to see with autopilot here, taking it to the next level and starting the basis for full self-drive, which is really going to start to ramp up now. And in addition to that, Tesla scored 5-star ratings in all categories in the Model 3. In fact, it is indeed the safest car ever tested in the US. So really amazing. And not only is it a great looking car, it's efficient, the price point is coming down, it is literally the safest car ever tested. And the last big update that Elon shared in his opening remarks are an expectation that deliveries in Europe and China will begin in Q1 of 2019. So now the Model 3 is officially headed worldwide and out of North America in just a few short months. Tesla took a good amount of time on this call to really focus on vehicle safety. That is a highlight of theirs. And not to say they made a dig at other automakers, but they certainly brought out the point that other automakers can kind of game the system when it comes to crash tests. Others have scored 5-star ratings in certain categories before. Elon made it a point to mention that you could cheat the test, if you will. You could strengthen the car in certain points, knowing that that's where the crash tests will impact and ensure high ratings. But Tesla, in fact, does the exact opposite. They anti-game the test. They look at the weakest points in the car, and they truly just care about our safety and the safety of others around us, and they look at strengthening the weakest points of the car, not the points that are going to pass just the crash test alone. They concluded by suggesting that their friends and family drive Teslas, and this is more than just about profits. This is about safety for everyone that's around them. And the next big step is going to be with active and passive safety coming from autopilot and the improvements with the neural net. Simply having a car with a computer that is capable of doing more and seeing more than any human driver could ever do. And of course, in true Elon fashion, he ended the section by saying safety is not boring. I got a good chuckle out of that one, and certainly it's not. I've now purchased another Model 3, so we have a 2 Tesla family, and we are absolutely thrilled and overjoyed to have the safest car on the road in our garage. All right, after safety, they moved on to autopilot as a general category, and Elon did confirm that Navigate on Autopilot is next up for the version 9.0 software. It's really close, and we should see it soon. Oddly enough, Elon did tweet about this. I did retweet it and just noticed this morning that that tweet is no longer there. But they did mention it on the financial call. So I'm sure Navigate on Autopilot is coming soon. For those of you who are not aware of what that is, that will allow Autopilot to switch lanes for you, exit the highway, and make decisions. They did say, of course, when it first launches, it will ask for your confirmation before making such changes. You'll acknowledge, and then the car will proceed with the change. Down the road, as improvements are made, the car will, in fact, make those decisions, and you can waive the right to confirm first before making those changes. They also confirmed that Hardware 3 is doing well with testing, design, their build out of it. It is in existence right now in S, X, and 3 on test vehicles currently being tested. It will be a really easy, less than 30-minute changeover to move from the old hardware to the new. And Elon made it a really good, important point that if you're waiting for Hardware 3, if you're waiting for full self-driving, there's no reason not to buy a car today and wait for it. The expectation is that they'll have it ready by the end of Q1 2019. It'll be a less than 30-minute upgrade at a Tesla service center. If you do, in fact, buy this full self-driving option today, that will be free, a free upgrade. So again, no need to delay if that's something that interests you. And as far as what it would cost for everyone who doesn't have full self-driving, myself included, there is no mention yet what the hardware upgrade cost will be. And just to reiterate on the Hardware 3 front, all cars that are Hardware 2 and up, so that's Hardware 2 and Hardware 2.5 as it's referred to, will be eligible for upgrade. So if you really want to take a second and think about what this means, Tesla is selling cars that are now a few years old that can be upgraded to the latest and greatest hardware at really low cost, or potentially no cost if you've already purchased the full self-drive option. That's just something you don't see. Other auto manufacturers are going to try to sell you that new car. 3 years later, 4 years later, they want to get you into the new car. They don't want to keep making your car better and prevent you from buying that new car. So really just impressive stuff when it comes to continuing to advance the technology and not restricting it to just new car sales. We did see this on Twitter, but it did come up again in the financial call. Elon did confirm that full self-drive is currently off the menu when ordering the cars, but you can order that off menu. He said it added some confusion, and there were some customers who were confused between what enhanced autopilot is, where that ends, and where full self-driving begins. So they took it off the menu to avoid the confusion, but it is in fact something that you can order and still get in on the before delivery discount price, if you will. Elon closed out the autopilot section, calling it a shared electric future. That's what his goal is, and he sees Tesla competing with Lyft and Uber in that space, and he believes that Tesla is going to be able to be a mix of Uber, Lyft, and Airbnb. So the ability to send your cars into the fleet, monetize your car when you're not using it. In addition, Tesla, in fact, populating the fleet themselves where the market finds it necessary, where customers don't put enough cars in for what customers are looking for. So pretty impressive stuff as we talk about Hardware 3 and the improvements in autopilot, and certainly leading into full self-driving here pretty soon. All right, so that concluded the presentation. They moved into questions and they spent a lot of time on questions. You could really feel how upbeat and positive and excited Elon and team were to answer questions. They showed a lot of appreciation for the Tesla team for all of the hard work and effort that went into making a really successful Q3. There was only one question that Elon wouldn't answer. He wanted to keep the call about operations and business as usual. There was a question that snuck in asking about the new chairman, what would they be looking for, and he chose not to answer the question. It was respectfully understood and moved on. All the other questions were fantastic. I've highlighted a couple that I'd like to bring up here to your attention and tell you what the answers were to those questions as well. All right, so the first question that I found to be interesting was regarding how tight supplies were at any point in time during the quarter, and JB took this one. He did say there was at least a week, or and Elon clarified maybe it's just a couple days, where there were some supply constraints, especially with batteries, of course, in the Model 3 line. But JB did clarify and say tight supplies is more or less a concern on the energy side and less so on the car side. They've got a lot of progress in their efficiency and production of the packs, and they also have third-party support with Panasonic really coming in to assist. So they were not worried about their ability to meet demands going forward. Great question came in next asking about the mid-range battery option for the Model 3. Why and where did this come from? Elon's answer on this one was fantastic, and I'm a firm believer that the mid-range Model 3 is a steal of a deal and a genius play by Tesla as we close out the year and the full tax credit goes away. Now, Elon did not say this has anything to do with the tax credit, nor does it have anything to do with trying to maximize the selling price to the customers. He reiterated that the goal is to get the car to be as cheap as possible in lieu of their inability to reach the $35,000 price point just now. This was a great compromise option, bringing in the mid-range battery at a reduced price, and it's clear that sales have been fantastic. They didn't mention it, but we did see a report and then of course confirmed on the Tesla site that the mid-range battery pack option is already increased to $1,000 just a few days after being introduced. So clearly demand is very high for that vehicle right now. I will say, while this is about the financial call, if you're on the fence, the time to order is absolutely now. The window's really tight to get a mid-range Model 3 in before the end of the year. If you're in the US, of course, that's our cutoff for the $7,500 tax credit, which will cut in half beginning January 1st. So you must take delivery by 12/31. As of this recording, the delivery estimates were currently at 6 to 10 weeks, so it is really tight. Order now. Don't forget to order. If you're on the fence, if you're waiting for standard range, but you think you want the premium upgrades package, this is probably the time to buy and take advantage of getting the larger packs and better performance and everything that goes with it. So that's my little spiel on the mid-range, but really just really strong option that Tesla introduced here as we come into Q4. In answering the same question, actually, Elon did go into European deliveries and confirmed that production for European cars would begin in January, with deliveries expected for February and March. At a later point in the call, he did answer a question suggesting that, of course, eventually production for European cars would make most sense in Europe. I'll get to that one in just a bit, but suffice to say, Elon's goal, and it clearly makes sense, is to produce cars as close to where they're going to be delivered as possible. But like I said, we'll come back to that one in just a bit. All right, the next question I found to be pretty interesting was regarding where they saw the production rate going for Model 3. There was, of course, a question about the 10,000 number again, 10,000 cars produced per week. Elon didn't go into much detail on the 10,000. He said with a minimal investment, Tesla could easily produce 7,000 Model 3s per week. But he said the sweet spot is somewhere between 500,000 and 1 million cars per year. Now, that's not just saying that's what they want to produce, that's saying what they expect demand to be. And the justification for that number is BMW worldwide demand on the 3 Series is at about 500,000 units per year, whereas Volkswagen with the Golf is about 1 million. And they feel strongly that they've outcompeted BMW with 3 Series, so they feel very confident that demand for Model 3 annually worldwide will be somewhere in the order of 500,000 to 1 million cars per year. Elon went on to say for sure production would begin in China in Gigafactory 3 at some point in 2019. He didn't say exactly when, but certainly we could see progress being made on the factory in China. Pretty impressive, and we know how fast they move over there. And of course, he said long term, as I just mentioned, a plan would be for sure to have a Gigafactory or production facility in Europe as well. He did not give an indication of time on that one, though. As Elon went into more depth on that, he did say S and X production would remain in California, and the goal would be for the 3 or any other affordable or more affordable models where production costs being at the lowest possible point are critical, that those are the vehicles that should be produced as close to where they're going to be delivered as possible. The next question that I found to be intriguing was, would Tesla consider an app store for the car? The question actually was worded, would they turn the car into an app? But it was kind of clarified that, would they introduce an app store, and would they allow third-party developers? And interestingly enough, Elon's answer, it seemed like it wasn't something he'd considered too much. It was kind of a maybe. If it made the car better, more enjoyable, more efficient, it's something that they would look at. But his bigger focus was on Tesla's own ability to deliver the ride-sharing network and go head-on in competition with Uber and Lyft. And he felt with the millions of cars already in the fleet, Tesla had an incredible advantage over Uber and Lyft long-term. So that was a pretty impressive thought there. One thing that I did pick up on is Elon threw out a 30% number, but it kind of intimated that he hadn't necessarily given it much thought on what the cost to put a car into the Tesla network would be, what Tesla's share for running such a network would be. Like I said, he threw out a 30% number, but he didn't say much more than that. Next, the question came up again regarding trade-in patterns. We know from a previous call, Tesla shared some interesting facts about what people were upgrading to a Model 3 from, or what they were coming from. And they said there's no real discernible patterns or nothing too major to share, but one thing that they absolutely see the majority of trade-in cars for the Model 3 had a new car selling price of $35,000 or less. So with an average selling price of the Model 3 somewhere in the high 50,000 range, clearly the majority of consumers are making an upgrade in their purchase. So that's fantastic news. They're not necessarily just competing with the BMW 3 Series, the Audi A4, or the Mercedes C-Class. They're now actually taking away customers from Honda, from Toyota, from some of those other brands as well at maybe a lower price point, which could potentially be a more compelling car at a price point, but Tesla's stealing those sales as well. The conversation continued on, and Elon went down a path of explaining that in August, it took an average of 30 days to go from a car rolling off the factory line and getting delivered to a customer. Now, I want to keep this show less about the financials, less about the numbers, and more just about the cars themselves and progress. So that was a conversation around kind of the costs of keeping cars and not necessarily delivering them, the cost that Tesla incurs on a daily basis. But Elon did go on to say at the end of Q3, that time came down from 30 days to 20. And his goal for the end of Q4, and he stressed it's a goal, they might not reach this goal, but his goal is to bring that down to 10 days. So 10 days from order time to delivery. Obviously that means building up some inventory or just the right amount. They've got some better analytics on what people want, what the ordering patterns are, and obviously they can produce cars better. And certainly, as we saw at the end of Q3, some logistic issues being the bottleneck in getting the cars to the customer, but the cars were already produced. So some improvements there for sure, and logistics will go a long way in reaching that 10-day goal. So the question came up again, of course, what does it take to get to the $35,000 Model 3 that we've all heard about? And Elon said the target is to have the cost to produce that car at $30,000 or less. He didn't say exactly when that would be, but that is the goal, the sustainable price point and cost to get to the $35,000 car. Of course, like other auto manufacturers, even though they'll get to that point and they'll offer that base price car, many consumers take options. It's rare that you'll actually find a base model car. Of course, Teslas are made to order, so they might be the exception where you'll see more than other auto manufacturers where it's tough to find that car. It doesn't exist on a sales lot. But we should see some more news in the coming quarters, and hopefully soon enough that $35,000 car we've all heard about will come to be. All right, and to wrap up the call, Elon was asked a great question, I thought, how he felt and what his concerns were with the $7,500 federal tax credit in the US beginning the phase out in quarter one of 2019. What would that do to demand for Model 3s going forward and Teslas in general? So Elon's answer was twofold. First, he mentioned, of course, tapping into a new market for Model 3 and heading into Europe and Asia as well. So he felt, first of all, that of course that would offset the potential for a demand hit in the US. But in addition to that, the timing-wise, of course, Tesla's close to the aforementioned $35,000 car. So as they're able to bring down the price and actually deliver that car, he felt strongly that would offset some of the potential demand loss from a reduced tax credit being cut in half down to $3,750 in the US. All right, and Elon closed the call in classic Elon fashion. He went ahead and stated that Tesla has the most efficient cars, speaking specifically about the battery packs and overall design of the car, with the lowest cost batteries. So he felt like Tesla had a huge, sustainable, competitive advantage over the other auto manufacturers. And let me get this quote exactly right. I want to read it. Elon said, "We tried to help them and they didn't want our help." Them, of course, being the competitors. He said, "We've offered their patents. They've offered the ability to join the supercharger network. They've suggested that the other auto manufacturers make investments in things like Gigafactory, their own factories to produce batteries for their electric cars. And obviously, no one's taken them up on that. And the competition still isn't there yet. That bodes really well for Tesla, the company that we all love, to follow and support, having a great sustainable advantage in the electric car space for years to come." All right, so that wraps up the third quarter financial call. I want to put my take on it and really just discuss what stands out. So a few things. Tesla has been profitable before. Their last profitable quarter was actually exactly 2 years ago, third quarter 2016. But the numbers here really just blow that quarter out of the ballpark. Having over $300 million in net income really far exceeded everyone's expectations. In fact, the stock is soaring after hours as I produce this podcast. Last I checked, it was about 10% up after hours. Of course, there could be a little sell-off that could have a chance to drop back by the open tomorrow, but really just phenomenal numbers. So that's my first and foremost, my biggest takeaway. And then from there, just the confidence that Tesla exuded on the call, the improvements coming to autopilot, game-changing, the use of 360-degree cameras unlocked in version 9, and the ability to put cars on the road that are absolutely safer than any human driver could ever be. Seeing things behind you, to both sides, and in front of you, and in front of the car in front of you, truly are just things that human drivers can't do. And in the distracted world we live in, those improvements are game-changing, for lack of a better way to put it. And then, of course, the plan in place for a sustainable Tesla, no longer taking chances and gambling the company. Goals of being profitable quarter after quarter after quarter, except for periods of payback. Mentioning a desire to pay off loans, not refinance, and really just use their own capital going forward. So again, my takeaways are nothing but positive, and I think we'll just see more and more good news with each quarterly release. But that's all I have for you on our first episode of Tune In Tesla. I hope you enjoyed, and you can get used to seeing these regular news updates on a weekly basis, posting live every Wednesday evening. Good night, everyone.